Alright, so from a daily chart, this is going into Wednesday, May 27th. Price comes from an expansion phase. Obviously, the new week opening gap has been left unfilled in Nasdaq. I think currently there's a divergence at those levels with the S&P 500. So price is very bullish. I think that today could be a continuation of this expansion. Clearly, to me, this is pretty bullish. Again, the fact that it cuts through a lot of levels of interest, they didn't even bother revisiting them before expanding. Right, is leaving breakaway gaps on the lower time frame, is respecting fair value gaps, respecting order blocks. So again, I think the objective for the week is going to be at least 31,000. If unless today were to find it's a rejection in premium, but it's hard for me to anticipate that in advance. This is only something that I could determine inside the session through divergences. But overall, I think that we have to keep a bullish bias, and that Wednesday could likely be an expansion phase. Now, this doesn't mean that it can provide a good opportunity in New York. Okay, say we have a large expansion overnight. This could lead to New York consolidation. It's going to depend on how the daily profile forms. So in terms of discount arrays, so far price is already expanding from premium levels. We'll look at that on the lower time frames. Overall we have the NWAG, right? The NWAG, the breaker, the discount. Those are the discount arrays of interest. And overall premium targets, we're looking at 31,000. Maybe we can look at some standard deviations on the lower time frame, right? Because maybe it's unrealistic that Wednesday expands so much. So we'll look at some targets. We can look at the 4-hour chart. Yesterday's low of day, the day of Tuesday, coming inside a fair value gap of importance here. This is a fair value gap that we had covered coming inside of the day. And again, the reason why this is an important fair value gap, well, is because it cuts through this is a higher time frame mitigation block, right, or a lower time frame breaker. Right, the old high that sends price lower, and then from there price trades higher and ends up expanding through it. Right, in fact, you can see that it even came back to the high of the range. Hold it. There's also a time element to this, right, being the new week opening gap, and the fact that on the bank holiday, Monday, price expanded and consolidated. Okay, so because of that, this favorite coming inside Tuesday, seeing an expansion high, right? Expansion, consolidation, manipulation, continuation. This is a classic, power of three formation, and again forming around a fair value gap. So we can keep these levels on our chart. Price could revisit it. Okay, it could be that today, Wednesday, revisits it and then continues expanding, or builds a range around it. I think I can remove the levels of the breaker and discount. I don't think that price is going to revisit this level. This was a level from last week. We have a breaker. We have a series of order blocks, but again, like I was talking about, since there's too many of them to choose, I'd rather just use the breaker or simply the wick of the breaker itself. Right, price has found sensitivity around this level, right, because this was at the time a bearish order block, where it was a large rejection inside of the range. So wicks lead to high resistance. So if price was going to come back in here, very likely that could have found a continuation higher, or if the profile was bearish, right, seeing some kind of support from it, right, to retrace or reverse from there. Okay, so we'll look now at the 3-day look back. So far on the 4-hour, you can see there's the rejection block of an order block. Right, this is a candle. Well, we can look at this on the 3-day look back. I'll include the bank holiday inside of the 3-day look back. And okay, this is very typical of a trending environment, right? The expansion to consolidation. And okay, so inside of this range, what this means is that here we have a dealing range low, right? A new dealing range low coming inside the day. The dealing range low was the previous day's low, right? As that was a shakeout. While the previous day's low in this case coming inside Wednesday is also a shakeout inside of the fair value gap. And we have there's an order block that cuts right through this series of order block. This is probably on the 4 hour we can look at. Right, this is a series of down close candles. Right, and coming right from 50% to the high of that 4 hour bullish order block, there's a 1 hour order block inside of the range. So I think that this is definitely the period of interest for the day. Look, if price is really bullish, you could even simply expand higher from there. From here. Right, maybe this is the low of day, and you come inside the session, right, and price is trading at these levels, leaving fair value gaps behind. So in that case, that could provide opportunities for New York to retrace and then expand. In case it's going to be some kind of swing to Z, then just pay attention to what 930 does. Say pre-market expands, London expands, pre-market consolidates, and then 930 opens, but doesn't trade lower first. Right, say price is bullish and 930 opens and starts trading higher. Then in that case, that could be a scenario where it leads to some kind of consolidation, especially if the closure of the opening range, of the first 30 minutes, doesn't have expansion phases, right? So inside the 950 to 1010 macro, if you see mostly some kind of range building instead of expansion phases, then you can likely anticipate that it could be some kind of swing to Z. Okay, so this is a scenario where Asia is low of day at these levels. If not, we can look at a London, right, some kind of London low of day. Asia consolidates. London comes back in the range, creates a low of day, and from there expands. That could be also a possibility. And I think that if this level were to get inverse, then the target would be the new week opening gap. Okay, so until this level is held, again, ideally, if it's even going to get revisited, I would ideally like to see it revisited in London. I mean, because then if London starts expanding higher, in that case, then that would mean some kind of New York reversal. So anyways, there's a lot of scenarios obviously that can happen. The day just started, right? So as the session develops and you come inside New York, you can see what the other sessions left behind, how and if, right? If they did, how did they trade around? In this case, the order block, right? Could be this order block, could be the range of the 4 hour order blocks. I think that both levels are valid in this case. And again, if it didn't even trade into these levels coming inside of New York, right, then assume that price will likely continue expanding or consolidate. Unless the reversal at all-time highs is, the bearish reversal at all-time highs is hard. It's very hard to anticipate, again, because it's something that happens in the moment. So you need a lot of confluence behind your trade. Okay, ideally some kind of session divergence, because if not, just trusting the lower time frame divergences on a bearish when you're thinking is going to be a bearish reversal, oftentimes leads to fake outs, right, that then continue trading higher because price is at all-time highs, and all it does at all-time highs is go up or consolidate. So keep this level, okay, see in case it's revisited, see how it trades around it. Any fair value gaps, okay, either right from it, right, so it's creating fair value gap, or fair value gaps through it. Any divergences formed around this level, okay, maybe a divergence with the low of the order block. This is the London close range low at these levels. There's also, I believe, the 930 open somewhere around this range, so the opening range gap of yesterday, at least the upper half of it. And again, if it's not revisited, then see what the previous sessions left behind. Ideally, you want to see 930 come back in the range first and then trade higher. If not, right, if 930 expands, then you want to see expansion phases around the closure of the opening range. Okay, so keep this level on your chart, and we'll see inside the session what price did around it.